Might as well look good, going broke, my dad always used to say, or it'll look good at the auction sale. That was a little bit of a mantra around the farm when things were going wrong, let's say. That's really what got me thinking about the conversation that we're going to have today, folks. After our landmark event in January with Robert Andjelic, Canada's largest farmland owner, where he warned of the tsunami that was coming, that he maintains is on its way or happening right now. $1 billion prairie farming operation went into creditor protection. And I think all of us in Western Canada felt the ground shift beneath our feet that day. That was officially announced. Though the fault lines may have been fortuitously forming for more than a farming fortnight, my friends. And while all the decision making bankers in Toronto, maybe they're just hearing nothing about how bad it is out here in the headlines. Almost 40 farms this year and counting. Maybe we've exceeded that number this year. They've quietly looked up Robert Andjelic to sell him some land. So they can find a way to put in the crop and they can find a way to sleep at night. And some might call this serfdom. Some might call this serfdom. But what do you think? This is a democracy. This is a conversation here today. And Kevin Hursh is writing about all this. He's farming 2,500 acres himself. He knows about all these angles. And Tim Hammond is a sophisticated conductor on the transition train that all farmers are somewhere down the track on, from Homestead to Horizon. If you're getting an echo, that's maybe. I'm not sure if you're getting an echo, Drew. Is anybody else getting an echo from my soliloquy here? Okay.
Not here.
Sorry if it's Adam Shepard said no echo. Echo, echo, echo. Any echo, echo, echo? Just kidding. We also have Dallas LeDuc, who's going to be coming on the call. He's made some notes. He says absentee landlords should pay higher taxes by virtue of the fact that they're not there to put out the fires in the RM. We're going to hear Robert's response to such a claim. And finally, John Kotylak, my friend from north of Indian Head, he said, why is it always the 5,000 to 12,000 acre family farms that are strong? Because they can manage the land base. They can keep on track and they can take a personal hit if times get bad. Betting on 50 to 400,000 acre farms don't work. So it is time to have that conversation. Welcome to Too Big to Farm. And if you're with us live on YouTube right now, like, subscribe, turn your notifications on so you can see when we go live. It helps the channels. And if you know an operator who needs to hear this, share it with them. My name is Dan Aberhart, and I run Growing the Future Productions, Western Canadian Agriculture's foremost live briefing platform. And I grew up alongside a farm that's now over 20,000 acres. They're trying to get the crop in. They brought in the Army here recently, but they're getting there. So today, what we're going to give you, maybe 60 minutes and maybe 90. I think it's worth 90 if we got to go there. Number one, a clear read on what's actually happening in farm debt in Western Canada right now, not the headlines, the real transactions from the people closing them. Number two, a framework for thinking about farm size. What is the right scale for a family operation to survive a downturn? It's really what we're talking about. What does it look like when a farm gets too big to manage the land base? Robert and I have different opinions on this. We've talked about it many times. We're going to do it publicly today. And third, an honest answer to the question everybody's dancing around. Is the consolidation happening right now good for Western Canadian agriculture or not? You will hear from the buyer, the broker, and the analyst. Then you can decide. Let's get into it. My esteemed guests, Robert Andjelic, largest private farmland owner in Canada, 250,000 acres and counting, I believe. Sold his entire commercial.
No, just about. I'll have to correct you on that 40 calls.
Okay.
Those calls came from Ontario, Manitoba, Saskatchewan, Alberta, even BC. Of course, the Ontario ones we weren't interested in. BC ones were fruit growers, but it was a common thread that connected them all, and it is that lenders were putting the squeeze on them, and some of them had problems even getting the credit or the line of credit for the inputs. So they wanted to sell some land, of course, and then rent it back. The problem is that they wanted to rent it. Of course, they didn't want to give it to a realtor because a realtor will, of course, sell it to anybody, and they won't be able to rent it back right away, possibly. Uh, if they sell it to a producer. So they had, of course, the manpower, they have the equipment, but they were just short of capital. I did end up doing a few of those deals, but out of the 40 something, two or something, there's only about half of them were something that we could consider or fell within our framework of the land we want to purchase.
Right. Yeah, that makes. I was curious how many of the folks that had called in and you had discussions with were a fit because you have constraints, you have boundaries about what deals you can make, obviously, and different things about that. I don't know if you want to share that, but
Well, we did make four purchases.
mhm.
I did get a call from some of them back saying, well, thanks for buying it. Now I got the bank or the lender off my back. It wasn't always banks, it was other lenders as well.
Yeah,
And now I can get back to my business of farming.
right. It turned into a positive, and we'll get to that. But I want to launch this poll here. This is, I think, Real Agriculture was touching on this too. Real Ag was saying, what is happening in Western Canadian agriculture right now? Is it structural, permanent changes that are needed for farms like mine to survive? Is it cyclical, a hard stretch, but we will come out the other side? Is it both? Structural cracks exposed by a cyclical downturn? And hey, I genuinely don't know yet. What do you've been calling it? Everything that's been happening hasn't been a surprise, including, what's happening with the large farm and some of the larger farms and some of the smaller farms. I don't think this is just a minute story. Obviously, there's different farms that have got over their skis for different reasons in business. What do you think? What do you think is happening here? You said it, but you need to keep saying it. What is going on, Robert?
Oh, which point do you want me to address?
Why is this happening from all these different size of farms? You're saying it's not one size fits all, but we're seeing a common theme. What is the common theme with the farms that call with what's happening in the agriculture community? Enlighten us.
Okay, let me kind of give you a little brief history of farm size. In, let's say, go back 100 years, 1925, essentially zero private operated 50,000 acre modern style farms existed in Canada in the way that we define them today. Okay, a 50,000 acre cultivated farm in 25 faced massive constraints, such as horse-powered farming still lingered. Combines were primitive. Labor requirements were enormous. Transportation bottlenecks were severe. And capital markets were undeveloped. That could be one of the big keys.
Right.
Even 10,000 cultivated acres was considered enormous at that time. Then, then, uh, you, then you go, uh, let's say, 50 years back, 1970. A 50,000 acre grain operation in 75 would have been viewed as almost unbelievable in Canada. Today, there's a lot of them. Typical prairie grain farms were often 1,000 to 3,000 acres. They were considered substantial. 5 to 10,000 very large, and then 20,000 acres was enormous. And they were considered famous regional operators. In other words, they were the talk of the coffee shops. All that time, machinery capacity was smaller. Grain handling logistics were slower. Financing was tighter. Uh, crop technology was less advanced, and most farms were still family labor based. In all of Canada, there were probably fewer than 5 true 50,000 acre crop farms. Today, there's a lot of them 40, 50, 60,000 acre plus in mid 70s. Across all of North America, perhaps only a few dozen highly industrialized operations reach that scale. Most large operations then were totally like cattle ranches and so on that we see like Bonanza style. So then we could go to number further down and explain like what caused all the change, why the explosion happened, why the farms grew. The jump after 2000 was driven by your auto steer GPS, massive air seeders, high capacity combine, zero till, improved chemical systems, delivery system, fewer farm families, aging operators, leasing becoming normalized, better grain logistics, low interest rates after 2008. So then one modern operator can now farm what previously required 5 to 10 families. They had hired crews. Just a second, I have to take a drink of water.
You don't have whiskey in there this morning? Just water?
As you know, I don't drink even beer, so it gives me a headache. So I think it doesn't like me. Why the hell should I like it?
Tough being sober. Tough
Uh,
being sober, Rob.
and of course, one of the big components was the improved financing. Today, farms over 50,000 acres are still rare, but no longer shocking in the Western Canada. There are no meaningful numbers of them across Saskatchewan, Alberta, Manitoba, North Dakota, and so on. There are now. Okay, and then we could go to why the expansion happened. This is going to continue. This is not going to stop. So that jump after 2000 was driven by the auto steer GPS, massive air seeded, high capacity combine, zero till, improved chemical system, fewer farm families, aging operators, leasing becoming normalized, better grain logistics, low interest rates after 2008. So one modern operator can do what 5 to 10 families did before. And the most important shift, the real structural change, is not just the existence of 10,000 acre farm. It is the fact that they're run as businesses with the right structure. They understand the economy better, and they're good at marketing rather than just producing. A lot of producers are very good at producing, but they're shit poor in marketing. And there's no darn reason in the world why all the guys in the commodity pits in Winnipeg, Chicago, and so on should make all the money, no matter what the heck the producer does, and he sells at a wholesale to them. So we have to cover that portion of it. We have to understand marketing and the calls, the puts, and hedging and everything else.
Well, I love it. That's a great intro. Thank you for setting the stage. That's a wonderful history. I didn't know you were going to do your homework. Just kidding. Of course you do your homework. That's literally your MO. That's
Well, if you extrapolate everything I just said, basically you're still going like this. Now, the limiting factor today most likely will be credit. Like we addressed previously, that credit squeeze and so on in previous broad. But that'll all be solved by higher commodity prices, which I fully anticipate due to one of the big components is, of course, the Israel US Iran war and the closing Straits of Hormuz, uh, limiting fertilizer, fuel, and chemicals production. Uh, and then the super El Nino that's coming. I did my homework about, I started picking up on that quite a few months ago. But this one is I think going to be the worst one since 1897. Now I looked at that number some time back, so it might not be the right year, but it is a very strong one, and it's potentially could be the strongest in history or record keeping. I mean,
Yeah, we want to get into that. I'm going to go around the horn a little bit here, but I wanted to share the results here of what folks think is going on. And really, half of the room thinks it's both cyclical and structural. That these times come and go, but there's also something bigger that's maybe broken. And I think we're all on the same page there. We had a comment here from Ryan Bonnet, friend of mine, ABB Solutions, saying, "I know a guy who puts on a course that teaches farmers how to use calls and puts effectively." There is a big gap in marketing. There's a real and that's been benchmarked, and the number was, I think, $70 per acre. There was an MNP study, and we've talked about that, and that is a big difference. And it's a shame to be such a good producer and not market properly. But sticking with the size theme here, and this is the theme of the show, but it turned into so many interesting aspects that we could talk about endlessly. But of course, we know farms are going to continue to grow. I'm not going to argue that, but I want to ask Kevin, because Kevin is a 2,500 acre farmer, and some might say that's a great idea, a nice place to be with everything paid for right now, and no big problems. You can sleep at night, and you go out and you seed in the same 2 weeks as everybody else, but you don't have a bunch of the headaches. My argument is maybe too big to farm is when you can't put the best fertilizer on your field that is your footprints. At some point you got to look at your people in the whites of their eyes. You got to be able to get onto the farmland yourself. And Robert, you'll get a chance to give your side because you don't agree with me. But if you had 10 farms like my brothers across Hell's Half Acre, all across Western Canada, across Montana and Colorado and Arizona. I mean, Arizona's a nice flight. Let's not be hard on Arizona. But how do you manage that when I see how difficult it is in a spring like this when you get behind? I know what they're dealing with on the farm and how challenging it is. If you have 10 of those with all these unknown hidden things, waiting for you, how would you deal with that? And why are you 2,500 acres, Kevin, when you're a competent guy? You could have grown. You heard all the things Robert said that you could lend, you could have auto steer, you could do this, you could do that. I'm going to shut up now. But Kevin, what's your opinion on too big?
Well, it's not a very big farm, but I haven't been getting much sleep. We're just about done seeding.
Yeah.
Bags under my eyes maybe are a testament to that. But I think the difference comes when it's primarily a family run operation with maybe a few employees. You can do it with one big seed drill, maybe a couple of combines, probably one big sprayer, and you can cover a lot of acres with that. I think it's a quantum step to go to 2 or 3 big seeding outfits and 4 or 5 combines, and suddenly you're doing it with a lot of hired labor. The management requirements become much different, and that takes a whole new skill level in human resource management and financial management. But the ability to farm a lot of acres with just one big air drill and primarily family labor, that has continued to grow, but that's probably going to hit a plateau at some point. But the management required when you go to multiple implements or multiple modules of that size, and then you start spreading it out over different geographies. Holy cow, that becomes a nightmare. But most of us would kick our butts and say back in 2005, 6, 7, we should have been buying farmland and mortgaging everything to the hilt, because look what happened to farmland prices, and everybody's balance sheet looks wonderful. That was the time to be expanding. But some of us saw what happened in the 80s and were reticent and didn't know how long the good times would last, and we're into that again. One other point I would like to make is, we're looking at this little dip in the economy of the farm industry. There's a pretty good chance that we're going to come out the other side of this looking entirely different, mainly because of the shortage of fertilizer in the world. If you look at where fertilizer supply is in countries around the world, you can't envision the world producing as much grain as we have been for the next year or two. You see countries that are probably going to increase their biofuel mandates because of fossil fuel prices. And yes, fertilizer is going to be tremendously expensive and maybe even have availability issues, and that's going to be a stressor. But you have to think that logically, grain prices are going to have to react at some point. Now, that might be a year away yet, but we might be the start of a new ag cycle, and we'll look back and say, oh gosh, we shouldn't have been so pessimistic at this point in time.
Well, that's Robert's argument, and we're going to get deeper into that later in the month too, because time is limited on this call too. But Tim, what are you thinking? And then we'll get back to Robert. What's your take on the 20 minutes of talk thus far?
Yeah, I really like what Kevin is saying, just about kind of the size of the farm kind of capping out. Maybe around kind of 5, 6, 7,000 acres. You got a line of machinery, you got management. Sometimes you get two brothers or two families that are farming together. You get that up to 12,000. To go beyond that, I've seen where farms have wrestled to go above that is when there's they just don't have maybe the leadership or the management or the human resource capabilities that they need to do that. Those that have kind of grown beyond that, they have a knack for organizing people, setting up structures, scaling things, right? And so, and there are 100,000 acre farms out there that are successful, right? That are making it work. And so it's a different kind of structure in there. I've always said the hardest growth is from 2,500 acres to 6,000 acres, right? It's just trying to balance all the equipment adjustments, the land adjustments. But once you hit 6,000, really the next logical step is another 6,000. Okay, we're gonna, what's another pod look like, right? In terms of land, in terms of equipment, in terms of labor. And that's enterprise thinking, right? And so it's shifting from growing kind of your farm to scaling your enterprise.
You never did answer me, Kevin. Why didn't you get bigger?
Yeah, good question. I was quite happy with the land I had purchased to pay off the debt. Only started farming on my own about 20 years ago. It was farming with family before that, and providing labor. Didn't have any equipment of my own to speak of. So we started off with some really crappy equipment to try to make it talk to each other. But when I got survived those first couple of years where you were just about maxed out on operating credit and got the land we'd been purchasing paid for, you look for opportunities. But we're in a situation where part of our advantage is all of our land is adjacent. Now we're working with a few cattle farming neighbors that are a few miles away and trading land back and forth, but we specialize in special crops, and our cereal rotation is often green feed for cattle producers, and we swap land back and forth. So we do things a little bit differently. But we don't have any debt at all, and I know that's not the best business model, because you should say that if you don't have any debt, you're not trying hard enough, you're not growing fast enough. But yeah, I do sleep better at night not having to worry about that aspect.
Well, I have lots of business ideas if you want to invest at any time here. Kevin, maybe we can talk after the show. But Robert, we want to get to you, but there was a question from Kim Levy, and I just launched a poll here. How comfortable are you with your current debt to equity ratio right now? Let's take a look at that, folks. And that's anonymous. Nobody's going to be singled out. If you feel compelled to share, I appreciate it. But Kim Levy, what about when farms become unsafe due to too many demands to manage their business safely and efficiently, as our industry does not have the policies we are enforced to implement and to manage these operations safely? Are farms as safe as the manager decides? Robert, what's your take on what's been shared here? I know you have a different take on farm size and management.
Can you get rid of that question?
Get rid of the poll.
No, yeah, the debt comfort.
Okay.
Okay. First of all, there is no right size. It depends on your corporate structure. I'll give you an example. Let's take a Ma and Pa burger restaurant. Look at McDonald's. The Ma and Pa business structure will not run thousands of McDonald's. So ultimately, if you tailor the size to what's required, there is no limit. And as far as and it all takes time. If you try to rush it, grow from 1,000 to 100,000 acres in a few years, that's one thing. If you stretch it over 20, 30 years, that's another thing altogether, because you grow with that, and your corporate structure grows with that.
Yep.
So there is no right size. And yes, the big ones, they do get a break, but they're not as efficient as the family farm of 5,000 or less acres. They are more efficient, undoubtedly, because everybody used to say, when I went and started competing against pension funds and the life insurance companies in commercial real estate, oh, they're big, you can't compete. That's crap. Yes, you can compete against them very easily, because they're so inefficient, and they have 10 people for each one of yours.
That's very interesting take. So we can admit, or we can speculate. We have the opinion that big farms might not be big farms. We know what we're talking about, like really big scaled farms aren't as efficient as the family farms, but they're getting breaks on other ends. So there's trade offs with everything.
It's no different than, let's say, when I was competing with the commercial real estate guys, the pension funds. Yes, they have the funds, and they have certain things, but they do not have the hands-on. And I have other advantages where I can build it at 10%, 15% less, at less cost than they can. So they're not that difficult to compete against. That is not true.
You did say
The
growth
large
could be too
corporations.
fast as one of the concerns, though.
The what?
When we were talking, we were debating size, but you said it could be about rate of growth or maybe focus. Like, what are the factors if someone who's big and in the news fails? There's a reason, but you're saying it's not that they're not the right size, it's maybe other factors.
Well, definitely it's other factors. The size got nothing to do with it. Ultimately, the future of farming is Daryl Monette's model. Okay, he was maybe, I don't know, you could say 5, 10 years ahead of time. Just like if you extrapolate everything I said about the growth, where 100 years ago, 10,000 was way too large and almost unheard of. Today, there's a lot of them. How? How did that happen? Like that change has been taking place long before Daryl Monette or I came along. And that change is going to continue like this. It'll stall a little now because of the banks and other lenders wanting a 50% LTV, loan to value. That'll slow it down, but ultimately it'll continue, because you need the lender's participation for growth, especially if it's fast growth. but fast growth isn't sustainable in a lot of instances unless you keep up with your corporate structure.
Dan, I have a question for Tim and Robert, because they have a really good perspective on this. Are investment firms or even private investors still interested in buying farmland when, the return on investment from rental income is not what it was a number of years ago, and maybe we're plateauing land prices, maybe not, but some believe we might be plateauing or at least slowing down the increase. Are investment companies still interested in buying farmland and renting it out to producers, or are we likely to see investment companies saying, top of the market, time to move our money somewhere else?
Top of the market is impossible to guess. Number one, timing is useless. And you could be right for years and lose your pants bidding against it before they say, yes, you're right, but you lost your shirt. So timing is impossible. Yes, there's a lot of institution money that's looking to get into farmland for different reasons. And now the commercial real estate is a dog's breakfast and blood in the streets right now for commercial real estate. All around the world. It doesn't. I don't mean just Canada, Toronto, Vancouver, and all the major markets and U.S. I mean all around the world, including China. But they are interested in some. See, every investor has a different goal. It's not just goal of you have to look at the economies, different geopolitical issues, and so on. Some have a goal. They want to take their money from someplace. Now, I've seen this in commercial real estate, not in land, because in land you have to be a Canadian citizen to own it. But I've seen where they just wanted to park their money in, let's say, commercial real estate, and they didn't really care about the return. They care that it's in a different jurisdiction, geopolitical jurisdiction, the currency, different currency, and so on, than where they made it, like in China or even Europe. Europeans are doing the same thing. So it's not always just pure bottom line. Like I have to depend on that strictly. That's my game. But others have different goals. And yes, the institutions are very interested in farmland, even with its low cap rate. Cap rate in commercial real estate normally was between, when I was in there, 10 to 20%. Today, if it's a building that's anchored well with, let's say, a national tenant, so on, could be as low as 5-6%. But they don't have the appreciation. There's a big difference. That's what I try to tell the lenders or educate the lenders, the difference between commercial real estate and farmland. Farmland is a appreciating asset going from bottom left to upper right. Commercial real estate is a depreciated asset, upper left, bottom right, because each year it depreciates. You have to do roof repairs, asphalt, parking lot, the building itself, and so on. So
Tim,
there's
do
a
you
lot
have
of
anything to add to that, or Robert? Robert, you got more? I don't want to cut you off there, but
yeah, cool.
Tim, you got something to add there?
Yeah, I think it really depends on the investor's time horizon, Kevin. We listen to Robert talk here, and like Robert's timeline, it's generational. It's 50 years, it's 100 years, right? And there are some institutions out there kind of thinking like that, but we're not seeing a lot of that investment in farmland right now. Most of the farmland investment funds out there or whatever, they've got like a 7-10 year time horizon, right? And so they're looking out 7 to 10 years. They do a cap rate right now at 2.5%. Is land going to keep going up 8% per year? Because that was a big part of that model. there's uncertainty around that. And so we haven't seen as many investors buying land as we once did anyways. And I think it really just depends on what their individual time frame is.
By what rate is the change of investor interest in the farmland, Tim? Would you quantify it?
Oh man, I would say like, I don't know, less than 5% of our deals are to investors. You know, at the peak, they were maybe 15%. Even at the peak, it was mostly farmers that were still driving it, right? So I would say that it is down, yeah, significantly. We're still doing some deals, but not a lot. We get a lot of calls from farmers looking for investors, you know, the same way that they're calling Robert, they're calling us, right? And they're like, hey, I just want to sell 2, 3, 4 quarters, reduce some debt, but I want to continue to farm this because if I don't continue to farm it, it jeopardizes my revenue model, right? So I'd still like to keep it in the enterprise, just go from paying interest to paying rent. And so we've had more of those kind of calls in the last year than we've had since the early 2000s.
Well, and imagine how many of those people haven't picked up the phone yet or are waiting to a certain breaking
Mm-hmm.
point. And I think the distinction with Robert is you're the one guy, Robert, that they can call and likely not have to face a prospect of somebody else farming it on their behalf. And I wanted to make a distinction. It seems lost on the internet crowd, God bless them, that you are not the same as Manette. Somehow you're in the same camp. Very different business models, very different businesses. You bought your first 80,000 acres with cash, garnered from other successes in businesses, and you're a landlord. You're not farming it. So just make your distinctions, I guess, before your comments is my treatise to the folks that
Well,
are pontificating.
there was a question you put up there. Uh, if I was comfortable with my returns and my LTV, yes, very comfortable. But my loan to value is below 24%.
Right. Because you've been doing it a
So
long time on
that's a
landlord's
big
cheap. Yeah.
difference. Uh, and it's again, I've been working at it like what is 60 years plus to build all that. So I didn't do it all in 10 years.
And you look like you're 49. What's your secret? Tell
Uh,
us your longevity secret here. Staying young and getting rich. We've got lots of comments here I want to get to. Adam Shepard was right on the nose when you were talking about size there, Robert. In 2009, roughly, Top Crop suggested the most economically efficient size was 10,000 acres. It's likely 12 or so now. Obviously, it's always going up. After that, it's incremental. There's 100,000 acre farms that are as efficient as any farm out there, and I think we can think of a few, and several crew managers rather than several geographic farm managers. It's just going to, obviously things are just going to trend. And I think it's material that you said you see Manette's is the model of the future, even if they're before their time. And people might not like that, but there's no business that doesn't consolidate. And if you're not growing, you're dying. And there's change. There's change in the world, but there's still room for people like Kevin to do their 2,500 acres. You're looking good, Kevin. It's look like you're flourishing or doing that and other things. So nothing wrong with that either. You can be really good 2,500 acre farmer. You can be the best in the world.
Yeah, well, and there's different ways of making money and than just doing the same thing that everybody else is. There's different crops, there's different marketing, there's different approaches that you can do on a smaller acreage. But something I think that people are looking at it and say, oh, it's cheaper to rent than to buy, to pay interest. It's cheaper to rent. Yeah, okay, but you better make the calculation and decide if you're still making money renting it. Because if you're paying too much money for rent, you're not getting anywhere anytime. Maybe you're renting it because you hope to have an option to buy it someday. You don't want to lose it. If you lose it, you got too much equipment, so your fixed costs don't get spread over as many acres. But I think a lot of people have got caught in the trap of we want to farm this many acres and we can rent a whole pile of it, but boy, the rental rate's got to make sense, or you're just farming it to say that you're big.
Robert, do your rental rates make sense?
Well, we've done calculations, and based on our last appraised value, uh, so so our cap rate is 1.6%, and then based on our rents and against the total appraised value. So that's a fact. So that means if you take 1.6%, you're paying 5% to the bank. The rest is the difference that you're saving. Yes, you don't own that. But if you can utilize your renting, I wouldn't say that it's the best route. It is a good route if you got a full line of brand new equipment that'll do 9 to 10,000 acres. If you run it around the clock during peak times, and if you're farming, let's say if you own 5,000, you can rent the other 5. It fits that void very well.
Well, I'm just putting it out to the crowd how much is rented or how much is owned, if that's okay, Robert. If I'm blowing up your screen with the surveys there. Tim, you had a point. Thank you for sharing that, Robert, by the way. And I just I did want to ask you what the rate of the cap rate would be if you just bought a piece of land outright now without having the benefit of all that previous land purchase at a low rate. But what would be the cap rate if we purchased land today without the benefit of buying land when it was super cheap relative to today? What's the cap rate?
Well, you'd be pushing 3%. You'd be hard pressed.
Mm-hmm.
Most of it would be listed at 1.5 to 2, and then you can negotiate and maybe get the lower the price, the higher the cap rate, of course. So you're lucky if you get 3. In some instances, you can, like if somebody's eager to sell and needs the cash, and you can do the fast cash, maybe you can go 3.5, but that's hard.
Fast cash, going to the fast cash booth for land. Tim, you probably had multiple points here. Why don't you share some?
Yeah, I was just going to say Kevin had a great insight there. It's not whether interest is cheaper or rent is cheaper. It's whether you should be doing it, period. A strategy isn't what you do, it's what you say no to. And, and I think that's really important is to know what actually builds your operation and what just adds to its complexity. So I thought that was a great insight, Kevin.
Sweet. I really like it.
One thing I'd like to point out, we've got, I'm not saying 10,000, 50,000 or 5,000 is correct. We got tenants that farm 1,000 acres that are just as good as any 30,000 acre guy. And they work within their framework, and they handle the credit if they need it, and so on, and they're just as profitable. So there's a room for everybody. There is
a problem with smaller operators, and you just you can't always be at the leading edge of technology, whether it's precision ag or whatever. You just don't have enough acres sometimes to justify spreading that cost over. So you have to find your efficiencies, your cost savings, and your extra profitability elsewhere than maybe you're not at the bleeding edge of technology all the time.
There's also key at the bleeding edge of technology. A 90-foot seeder with $1.5 million, you're not going to be farming 1,000 acres. What I'm saying, they got the right equipment for themselves. You can do just as good of a job with the older equipment, and you can't do 10,000 acres with it. But if you have the right equipment,
but you're not likely to put variable rate on a 20-year-old drill or whatever. It's just probably not going to be feasible. So there's some things that just don't make as much sense at smaller acres.
Well, there's key man risk too.
They can both be just as profitable. I just talked to a equipment rep, and he says, well, putting a GPS system, let's say on a 100 horsepower tractor, is same price as putting it on a 700 horsepower tractor, but per horsepower you're so much cheaper ratio wise. Okay, that's just an example, but works up and down the scale constantly. You have to have your business model set for the size of your farm. And if you can make money at either end.
I like that you mentioned auto steer is one thing that's really creating bigger farms. I think we take it for granted now, but I was there when they first came out with it, and people never wanted it. In 2004, when it came out on the sprayer, it's like, oh my God, what am I? I'm going to steer. What am I going to do in the cab if I'm not steering? And then 1 year later, it was Dan. This freaking thing is broke. I'm at the side of the field. I'm like, well, you still have the steering wheel, right? You can, but it changed overnight. Nobody wanted to drive without it. Let's be real, me included. So it's interesting. But I just wanted to say too, for whatever reason, we measure ourselves so much by the size of our tractor and the size of our farm, and there's a perception that 10,000 is better than 1,000 and 100,000 is better than 1,000. But do you want those problems of 100,000? Or a $1 billion farm? Do you want those problems right now that a $1 billion farm has? But that is the albatross of the entrepreneur who has the chutzpah to go forward and create value in society. I don't care who it is, whether it's the big companies. They often get torn down, but they serve a purpose too. And if they do one thing well, and they can do it a million times well, and people are voting with their dollars, that's capitalism, baby. And I'm a fan. It's not perfect, but I'll take it over the Bolsheviks any day, because we vulgar Germans got out of there. That's my rant. Anyways, Harry Sermons. I'm giving my own sermon here. Harry Gives Sermons. That's your new website, Harry. I remember the calls I got, say, 20 years ago, when farms kept getting bigger from younger, smaller farms, saying, Harry, the guy getting bigger outbid me, and I lost a quarter section or several acres I was renting, so I may not be able to continue. That happened more times than I care to mention. It's still happening today. I think at the crux of this is, who's going to be able to farm? How do we get young people into it? How do you, if you're starting out with nothing, who wants to respond to that? Younger, smaller farmers getting outbid.
Yeah, it's a funny thing. We talk about the price of land going up being such a big problem, because how are young producers ever going to get in? Well, the price of land dropping is a hell of a lot bigger problem than the price of land appreciating, because that causes all sorts of structural issues. And you guys are old enough to remember the 80s and then things going to hell in a handbasket. But you can't stop progress. And if you're a city dweller making $100,000 a year and you think you're going to go start a farm, way to go! You better marry right to make that possible. But it's not. You don't jump into a multi-million-dollar business. Small farms are multi-million-dollar enterprises. You don't jump into that with no resources, and society shouldn't be expected to subsidize you to jump into something like that. Business shouldn't operate that way in a free enterprise society.
When it does, it's very costly to the taxpayers, and eventually there's a bunch of people that aren't very happy and generally rise up and overthrow those.
Let me ask you a question, though. You can even if I give a quarter section to a startup guy, how is he going to get credit? Are the banks, other lenders going to borrow him money for inputs? You have to have some kind of collateral. You have to build your collateral through time. And yes, they can go into farming at slowly, leasing maybe, and with older equipment, eventually build some equity and so on, and then buy your own land. It could be done. There's no two ways about it.
Well, have you thought about banking young guys? I know all kinds of people come to you for all kinds of businesses, but I know what you're going to say. But
I'm not a bank. I'm focused on farmland. Well, yeah, I need the bank. I borrow from the bank.
I think that has a nice ring, the Bank of Andjelic, or the Angelic Bank. I think we could. You can use that one for free.
Here's something that people should think about.
There's a lot more to it than just starting up. You need to be functional, and you have to be credit worthy to go ahead. How are you going to get your inputs?
But let's say that you have no successors, you're ready to sell or rent out your farmland, it's retirement time. so many of those people run to the biggest farmer in the area and say, buy me out or rent my land, when, especially if they were doing it in smaller parcels, younger producers in the area would have a chance, and you wouldn't even have to take a big income hit to provide it to a number of and these aren't people coming out of the city. These are sons and daughters of existing farm operations that want to expand. Everybody looks around the community and knows who these people are. Give them a chance. If you're a retiring farmer and ready to rent out or sell your land, give them a shot at it. Break it up into smaller parcels so that they can pick up some of that land. You know, people rail against big farms all of their lives, and then when time comes to retire, they look out for the biggest farm out there to take it over and buy it as one chunk. And I don't know why they do that.
There's a reason for that, Kevin. Okay, I talked to, let's say that producer farmed 5,000 acres. And then, yes, a lot of them thought about splitting. And I said, well, go entertain that first of all, explore that, and then see before I buy it. Okay, so then he says, well, I can sell 3, 4, 5 quarters, but then I have to keep the rest. Now, because I can't sell my equipment, I can't retire until I sell everything. So they're kind of caught in between. Yes, a lot of them think about it, and I don't mind one bit. You know, I'll even help them with it. But there's a problem with that, and then they don't want to be left with 3, 4 quarters, and usually they're the worst quarters that will be left. The rest, better stuff, will be picked off, so they'll be left with that.
Good points. Yeah,
The
Tim, you
biggest point is the equipment. They can't, if they want to retire, they can't sell that equipment as long as they got. And meanwhile, that equipment is being way underutilized, and their payments are the same.
Yeah, equipment, that's a whole nother ball of wax. Tim, you got to jump off on the hour, and I do think we're going to keep going because we've got some questions here and some other people we want to bring on. But any final thoughts from you, Tim, before we let you jump off? Thanks for being a part of it and supporting the show.
Yeah, absolutely. I just I do agree with Robert. I think things are going to get bigger. That's just the natural course of it. I think there's tremendous strength in the family farm right now at 10,000, 12,000 acres. I think they can operate more efficiently, possibly, than the bigger ones. And they've also got more commitment and to the enterprise. That's what I find that the large corporate ones don't have, that the family farm does, is that commitment, right? You know, so when it's June 15th and somebody should be spraying, you know, the employee goes to the lake, you know, but the family goes out and does the spraying. So I think for big corporate farms to survive in the future, they got to figure out how to bring in that family culture, right? And for the family farm to expand is to adopt some of the corporate culture. So I think it's the marriage of the two that creates the ideal structure going forward.
Well said. Well, thanks for being on, and we're going to keep rolling here. So when you have to jump off, we'll understand that you weren't leaving for any other reason than you got other commitments. Where'd Tim go? Thanks. Yeah, I appreciate you having on. Tim's a big supporter of the show and a huge collaborator, so it means a lot to us here at Growing the Future, and that's how we make this conversation possible, through people like Tim that believe in it. So thank you. Dean Klippenstein is saying, I think our industry could step up their game when it comes to safety for farms of all size. And, you know, I could comment on this too. I mean, corporate safety for our farm really wasn't a thing until we grew. And we had the liability of a bunch of employees running around in all kinds of different scenarios. And safety, I can tell you, is a hell of a lot more prevalent on our farm today than back in my dad's day or my grandpa's day, when we, dropped a whole chemical tank full of spray right on the well and never thought twice about it, and all kinds of crazy stuff went on. And we're still alive. But John Kotylak, I want to allow you to talk. Chris Cheerwick, you've had your hand up the whole time. I just wasn't sure if you had something to share. If you do, I'll bring you on. But I know I had. If you do, leave your hand up. John Kotylak, who's kind of a big deal on Twitter. Morning, John.
Hey, can you hear me?
I can hear you. Yeah, I thought I'd let you have your say rather than read your comments. So go ahead.
Well, okay, I'm agreeing a little bit of what everybody's saying, but again, the 400,000 acre farm, why the hell do you want to be that size? There's no need for it. And you want a life? I've got a pretty damn good life on 11 to 12,000 acres. Yes, it's a family farm. Yes, we work stupid hours in the summer, but we get it done. And yeah, I have a place at the lake. Maybe I don't get there as much because I'm too busy on the farm. And, you know, a few other things. Yes, you're not going to buy $1 million quarter today and come out from the city, even if you marry the farmer's daughter. I don't know what else I got. Other than that, the 80s hurt Canadian farmers bad. People forget that farms were rented on the east side of Saskatchewan in some places for the taxes. And the reason of that was no other farmer could get the money to rent the land. But the 80s were also a time with those who were, how to put it, maybe a little more frugal. They were able to come in and buy a lot of property at the downturn later on. And so there's opportunities all over. But again, I'm biased a bit because of the size of our farm, but I'm very happy at the size we're at. Yes, we're always looking to expand a bit. We did again this year a bit, but we're not taking on like 10,000 acres at $160 an acre. It doesn't make sense to me. But anyways, that's my point right now.
But John,
But
to Robert's point, if your family is still farming in 20 or 50 or 100 years and you keep expanding at the rate, you will be there one day. You will be farming like Manette's.
I don't think I'd want to get to that, but yeah, you might be.
Well, maybe not you,
50,000.
because you like being down in Florida and you don't want the headache and, you know, you don't need any more, but your aunt, you know, your kid, like the model's going to go, you're going to grow.
You're going to grow. But again, like Kevin is farming 2,500 acres. He's happy at the level he's at. You find your happiness point.
Yeah. Yeah, he looks good.
I mean,
He looks really happy.
He looks happy. I can tell you I'm a happy guy. The thing is, guys are out there and they think they got to be at 100,000 acres. And they're running around from one end of Saskatchewan to the other. They got flunky workers because you cannot get the best of the best.
Yeah.
And
Can I jump in? Why the hell do you want to set parameters for anybody? Okay, if you want to farm 1,000 acres, you're happy with it. Next guy wants to farm 10,000, he's happy. Let everybody do their own thing, and be happy with it. That's all. And make profit with whatever. You farming 1,000 acres in Canada, a guy from India looking at it that farmed 5,000 says you're greedy.
I agree with you on that. I'm not here to tell somebody what size they are, but we've got a few large farms in Saskatchewan that are teetering, and the model's not working. That's the point I'm getting at.
Yeah. What was your take on this whole situation? I mean, you've seen it in the 80s. You're seeing history repeat itself. You told me about this when I was out in your cab last spring. You talked about this at length. I have the recordings, and they're crazy to listen to them now, just like Robert's stuff. What was your thoughts when you saw what was happening with, you know, a billion-dollar farm there with?
Well, again, you can see the right. I mean, I know the stages that they're at. You gotta, I mean, the bank does not want to take that amount of land back. It would, in fact, cause a big problem, as I have here with the drill right now. But anyways, if I don't get stuck.
John was going to be a panelist, but he's a little bit behind on seating. So, but I wanted to get John's perspective because of his 80s debt media experience and the things that he saw.
Okay, there, I'm not stuck. But again, with this, what is happening, you could see the writing on the wall. You're trying to spread yourself. Now, yes, the farm started in the Southwest. The Southwest is known for drought. Then they moved the farm further north, which worked out okay. Now, yes, guys will say you shouldn't farm in the Southwest. I've seen crops in the Southwest that makes the east side look like they're poor. I mean, I even had a buddy once that told me, why are you growing canola in Belcarre, Saskatchewan? Well, we're growing canola here. We found out in the 80s why we did, and we also found out during the drought years. But
Well, if you're farming further much north, they're all flooded. Okay, so the Southwest is having its problem with the drought. Then further north of York and all the way to Tisdale and so on is flooding problems. So every area has its problems. That's why it's good to be diversified and in different areas if you're farming large acres.
Agreed, but if one farm out of the group is not pulling its weight and having like 5 years of wrecks in a row, that would be a farm you'd be getting rid of. Would you agree with me?
I didn't quite understand your question.
He was saying if you had some farms that weren't as productive or profitable as the others, would you divest of them?
No, we don't divest of anything because they may not be profitable today, but I do long-term research of climate change and how it's going to be affected. And you'll never know which area will get the right combination of rain and frost-free days and everything else. And climate change changing so fast, you can't guess that. And if there's a drought someplace around the world, like with what's coming up right now, there will be shortages. And with El Nino taking effect, so you're going to have your major competitors like Australia not having nowhere near the production they get, and China is going to be affected. India, U.S. is already half of U.S. is drought already. So my point is that poorer land, even though it may not get 70 bushel crop instead of it gets 30, 40, but with the higher prices, it could still do well. The producer doing it.
Okay, John, I'll give you a chance just to final comment here, but we've got 20 comments here. I want to get to anything else, John.
Well, other than that, right now,
Thank you.
The only thing I want to say is, yes, we're coming into June here. The problem in Western Canada, if you're seeding in June, is the frost word, and it's the F word. Not the one I use all the time, but the frost scares the hell out of me more than anything. And when you get frost, you don't get any crop insurance that's worth it, and you got a bunch of crops you got to sell at a below market price. That's all I got for today. I got to get seeding. Have a good one, guys. Bye.
Thanks, John. Appreciate you, man. Yeah, that's kind of why I want to have John on, because he's not afraid to speak his mind at all. Okay, let's try and burn through these comments here. I'm glad we're having another session at the end of the month to talk more in depth about the research that you've done, Robert, and you can sign up for that by going to growingthefuture.ca. I believe it's all live there. Sean Padnote is saying, I love the 2,500 acre bought and paid for farm, although it's not good for my business because I rarely see them. No creditor issues, no HR issues, insurance issues, restructuring and recession. Maybe they stay married too. I don't know. They don't need a divorce lawyer. I always say to the small farmer, if you can't get your crop in, you pay your taxes and you go to the lake for the summer. Not the case for the big farms. That being said, I find that grain companies seem to treat this group poorly. Maybe the small farmer gets no love that way. And there maybe need to be some cooperation amongst the small farmers to find some bargaining power to push back. How are you getting treated as far as bargaining power goes, Kevin?
Good question. And there was probably more talk about this 5 or 10 years ago, how if you were buying in volume, you were getting better deals. And I don't travel in those circles, but I don't perceive that there's quite the savings that there used to be. Now, if you're big enough, you can take a tanker load of fuel at a time. You can get a deal on that, but if you buy at the wrong time, you might be offside on on more than you wanted to be offside on. So there are advantages, and sometimes you see farmers being run as joint ventures with 2 or 3 sons or daughters, each having their own farming corporation, running it all under a joint venture. So everybody's got the advantage of being taxed at a lower tax rate within their corporations. But all of the purchasing and all of the grain sales are done through the joint venture at much higher volume. All of the accounting for the overall farm is done through one central set of books. And even though the joint venture isn't necessarily its own legal entity, you see operations, family-based operations with numerous family farm corporations involved being a good way to structure a large farm, in my opinion.
Very hard to get folks to really work together because I find farmers are so individualistic, and that's the beauty. If you farm, you can do it your own way. Robert, did you have anything to add to that?
Not really. All I have to say is neither size is right for any one individual. None from 1,000 to 100,000. You have to know how to deal with the lenders. You have to know how to have the right corporate structure and everything else. So it's not one size fits all. We can all make a living if we work together better with marketing but like you said, farmers or producers are usually very independent thinkers, and it's very hard to do. But at least come together as a country. So work together, Canada. Okay, who's our competitor? Neighbors aren't our competitors. Our competitors, Australia, Brazil, Argentina, and all around the world. But
Right
the
on. Well,
biggest
that's
thing, onus is on the government to make sure that trade flows and that the subsidies are equal. If they ever can equalize that, so we have a level playing field. So one country doesn't over subsidize like what EU does. And well, all those countries, like a lot of countries, subsidize food. It's a very touchy subject.
yes. Yes, for sure. Darren Weinkoff is saying money is what makes the world go round, and unfortunately, having any extra to have a good life and expand with costs of everything today and still rising is getting tougher. Everyone's situation is different. But as Robert says, it's how you want to grow your corporation, knowing and watching all aspects of operating mentally, financially, and physically. Chris Cherwick has been saying a lot of the discussion so far has been around efficiency, not so much around what is the right approach agronomically. If expansion comes at the cost of proper agronomic stewardship, that greatly increases risk. I agree. Kim Levy is saying, having no successors, is it not up to the business owner to choose a transition plan of choice to sell, rent, or invest in a business partner to manage and take over the business? Yes, it's a free country. Dwayne Edwards said, Dan sold us the sprayer and we never look back. Thank you, my friend. I still love hearing that. John Kotylak said, I agree with the guy talking. Steve Andjelic, thanks, Tim. Chris. So Chris had a good question for Robert and Kevin with helping young growers getting into farming, and Robert's point of the lack of efficiency of parceling off land to help younger growers. Is there a role for government?
I don't think so. A lot of people advocate that there is, but who do you help? Do you help the son or daughter of a well-established farm operation because they want to go buy some extra farmland? Or do you say, oh no, their parents have lots of money, they have lots of equity, they're no different than anybody else? Or do you only help somebody that has no chance of succeeding because they have no assets and no experience but think they want to be a farmer? I don't think government should be making those decisions. You let business be business. But I do believe that giving younger producers a leg up that are in your community, if that's something you can do as a retiring farmer or even as an existing operator to give them some help or even mentorship, I think is something out of human nature that we should do.
No, and Robert, we'll get into that too with you about how you're giving back. But Darren Weinkoff is saying bigger isn't it for everybody? Bigger means everything bigger, including the stress and headaches. Robert is correct to do what makes sense to me. A lot of people agreeing with you today, Robert. My question for Robert is from Harry Siemens. What structure does he see
Makes
for?
sense economically.
Yeah, yeah. What do you see the structure for farmland in 2025 years? Your land. And will we see more people with the amount of farmland that you own? How big will you be in 2025 years when you're 100?
I don't know what 300 to 500,000 million. I don't know. I don't
Yeah.
have no goals. I just doesn't make business sense. Finished.
We'll have to
Okay, and
ask Steve.
going back that large corporations don't pay attention to the land and their inputs and everything. That's bullshit. Okay, the land is only we're only as good as the land and what we put back into that land. And I don't care whether you farm 1 acre or 100,000 acres.
Well,
Okay,
I
so
wonder if the bigger
far as
farmers too don't aren't more prone to getting professional help in agronomy, which you could argue is better than the
we
sole
promote
proprietor.
that highly. Like we have the field coordinators going, checking, and everything. Uh, there's 4 of us doing that.
Darren Kennett says economics has no friends, regardless of size, business structure, input cost, debt levels, farmland values, etc. The farm must be profitable to survive. Amen. Darren Anderson says being an egg lender for 25 plus years. What we often see is the number of acres farmed is not an indicator of farming and business success. Understanding the farm's financial positions, ratios, and returns are a much better indicator, as is knowing the impact of decisions made by management. Often decisions to buy land or equipment are made following short-term successes. Ooh, yeah, recency bias. And profitable years versus averages. In regards to farm expansion, whether rented or purchased acres, one of the key drivers is a working capital position. Insufficient working capital often leads to downsizing and liquidating assets. Cash flow is key, whether the farm is small or large. Alex Clark from Rabobank. Would you be curious? Would be curious how many tenants Robert manages across acres, what the profitability is that he's calculated from a management perspective, and if he has any metrics on minimum number of acres he'll rent to an individual operation. Reality is that the smaller the farm sizes, the more touch points from businesses to make the same number of dollars of sales per income. So curious if you've seen differences in profitability levels from a landlord perspective on this topic, or if it hasn't been quantified. Who's making money?
Well, the best business-minded individuals,
Uh-huh.
and that doesn't mean necessarily the best producers. Usually, they're closely correlated. We have about 250 plus tenants, and everything from they rent from 1 quarter up to 100 quarters. Uh, what was the other part of the question?
Mm, I think she was asking any
Well,
metrics on
about the
minimum. Oh,
profitability.
any metrics? Do you have any metrics on minimum number of acres you'll rent to an individual
Yes,
operation?
we won't rent exceed the 10% of our total revenue.
Okay, Dallas LeDuc, I'm going to bring you on here, so get ready. You can fluff up your beard or whatever you do when you're ready to go on air, because I'm going to bring you right on. He's got a beard probably a little bit better than mine, just a smidgen, but I'm going to bring him on right away. Joshua Leffers, any comments on the effect that removing the capital gains tax would have on small operators or guys looking to retire? My dad is at the farm size where if he doesn't structure a sale to the next gen properly, he may lose half the land appreciation to taxes. No, I don't know. Um, Not sure. Might have to talk to an accountant or a lawyer on that. Darren Weinkoff is saying one thing I haven't heard brought up is our federal government. I'm not sure Carney is going to be beneficial to keeping the family farm sustainable. It's not looking like he cares how anyone succeeds. Great show. I got a roll. Thanks to you all. Robert, you don't mind what Carney, hey, or
Well, I like the fact that he is weaning us away from USA uh, and opening up new exports to other countries, agricultural exports. I'm talking specifically, whether it be China or around the world, EU and all the rest. But from what I see coming in 26, 27, it doesn't matter. The world is going to need our product because I think the demand is going to outstrip the supply.
yeah,
And
we
you
want
know
to
where
really
the
get into
prices
depth
go.
into that in another show here.
I'm firmly convinced of that.
Dallas, you're on, but I just want to take one more comment. But we can't see your video. If you can get your video going, great. If you can't,
Oh,
that's
I don't know how to turn that on.
there should
Can
be
you
a
hear?
video button on there. I just want to get one other comment, and then we'll get to your question. You'll be the last to go, it looks like. Joshua Leffers is saying, comment on large farms using agronomists completely depends on the operator. Met guy that farms 8,000 acres on their own with one hired guy and have no interest in agronomy help. He just wants to seed spray and go to the lake. I've also met guys that are 500 to 1,500 acres that wouldn't farm without an agronomist. So it's just, I guess, are you coachable? Do you want to be coached? In my limited experience, the guys looking for professional help is not based on acres, farms, more on personality of the owner. So it's, again, it just comes down, you could be 1,000-acre farmer and you're just snout to tail, just killing it, financially, agronomically, with equipment and everything. Maybe your marriage is going good and you are busy working in the community, like Dallas's point here. But Dallas, you're on TikTok. You had a point about absentee landlords.
Yeah, I
That,
apologize. I can't get the camera going here.
no, that's fine. We all know what you look
With
like. Everyone knows Dallas.
yeah, thank you. Well, I'm a fire chief down here in RM 44, and I was on RM council for 16 years. And we had a recent fire, and everybody in the community, especially down in that part of the world, dropped what they were doing and went to that fire. And it made me think, like, the absentee landlords, and not just pointing out Robert, but he is one of the largest landowners in this RM. But everybody in the RM dropped what they were doing to go to that fire. Right from the general volunteers to the guys, the RM volunteers that run the fire trucks. We dropped what we were doing. I stopped spraying. I grabbed the water tanker. I went to that fire. So that made me think, why are not absentee landlords and investment ownership groups taxed at a slightly higher rate? No, I'm not saying 100%. I'm saying 10, 15% higher rate to offset some of the expenses that the locals and the volunteers are doing, because we drop what we're doing, no matter who owns that land, to go to these fires. So that extra money would be paid towards better fire trucks, better equipment, better fire halls, better training, and to help out with these fires. Because as us as a local in the community here, we drop what we're doing because we are here. We are responsible for the land that is here. So that's why I think the absentee landlords and investment ownerships should be taxed at the RM rate higher to offset the expense and maybe reimburse the guys that are dropping what they're doing. Quit making square passes, quit seeding to go to a fire, and we don't care whose land it's on. But I think that may be something that should be looked into more in the future, because I don't agree with the fact that absentee landlords yes, they're paying taxes on the road use. We're all using that. But I don't agree with the fact that we drop what we're doing to go to it, and they're not even within 1,000 miles of that fire.
Well, to answer that, we have tenants. Tenants live in that area, so they should be participating. Okay, then I looked at it. I addressed that issue that you're questioning. I looked at it, and I'm the type that's do what you do best and hire the rest. I looked at it. If I participate for one community, one RM, what am I doing? I'm just affecting few producers or few tenants in that area. Then I looked at it. What do I have that is very hard for any ordinary producer to address or to have any leverage or sway, let's say, with lenders? Okay, my past experience in commercial real estate put me in touch with a lot of head bankers. I've been dealing with them virtually my whole life, whole business life, since I was 17. Uh, Going to that, what you do best, I thought if I talk to the lenders, get them to understand agriculture better, everybody, doesn't matter where you're farming, across Canada, especially but like Manitoba, Saskatchewan, the three prairie provinces, which was my biggest target area, will benefit. When lenders think about loans, I'm talking the head offices in Toronto, the guys that make the rules. They think in terms of commercial real estate. How an ordinary producer can't talk to them. They're talking different language. I can talk to them because I understand commercial real estate and starting to understand farmland and agriculture. I can sway them and I can tell them the difference between the two because they'll ask the same question that Kevin asked earlier about. I think it was Kevin's questions about the cap rates and the rest. Well, why is your cap rate 3% when the industry you left was 10% plus? I can answer them those questions. I can answer them TIs, tenant improvements, which every commercial real estate guy owner participates in. And when it's a shitty market like today, they'll participate in the hundreds of thousands of dollars. And then 5 years later, some new guy comes in and needs to change the office configuration and everything else, rip it out, start all over again. Oh, yeah, is what I get. There's a big difference. Of course there is. When I do my improvements, land improvements, clear fences, brush and rock piles and everything else, bury it. So we have a clear run. The tenants benefit 10 years from now just as much as the original guy did. And then when you talk a lot of difference, what's your rent-free period? What's this? What's that? Like I got about 20, 30, 50 different answers for them. And they're coming on side. They're starting to understand agriculture much better. And without capital, I don't care whether you're farming 1,000 acres or 100,000, you're not going anywhere. None of us are. That is the key. So I figure that my time best spent is doing that. In the last 12, 13 years, I've been going to Toronto. I spent over $50,000, maybe more, most likely more, because their hotel rooms are $300, $400, $500. Meeting with these people, with the lenders, and they're all high up lenders, the decision makers.
Robert, how did so many financial institutions get it so wrong on the Monette situation? To me, it tells you that just because you can get a loan doesn't necessarily mean it's a good idea business-wise. If they're so cautious and don't understand agriculture, they should understand numbers at least. And how did they let that operation get to the precipice? What mistakes were made?
Well, it's no mistakes. It's basically competition. They're looking at it. They have X amount of money to invest, and they are looking at agriculture. I know that for a fact. I've been told by all of them, agriculture is their preferred field right now. Yeah, and I've been telling you for years now that there's going to be blood in the street with commercial real estate. For what 3 years I've been saying that. There is currently right now that they don't want to. They want out of commercial, but so what's the alternative? Where do they put their money? That is the problem. Agriculture is a much smaller industry, as much as we'd like to think of it as a huge industry. It's dwarfed by commercial real estate, which is the largest industry in the world. Derivative market is larger by notional value. If you include notional value in there, it's like 800 trillion or something, which dwarfs, but by the true asset class, commercial real estate is the largest industry in the world. Okay, so they're coming from something that's really large with large amounts of money. For them, it's not that much. They wanted somebody, they wanted a vehicle to invest through. That's one thing I get questioned a lot. But what are the vehicles? There aren't any really. You don't have the REITs like you have in commercial real estate. You don't have all kinds of funds uh, that you have in other industries that they others can invest in. So the problem is just putting money someplace in an industry that's fairly small, and to us it seems like it's really large. It isn't.
Kevin, what's your take listening? You've probably put a few fires out. You heard Dallas's question and his his monologue, and you heard Robert. What's your take on it?
Well, I have advocated and written columns for the Western producers suggesting that, somebody that's a retired farmer renting out their land, yeah, they shouldn't face any extra land taxes on that. Maybe even the next generation. But if somebody's an absentee, as an investor, their participation, and then don't want to diminish what Robert does with banking institutions, because I think that's excellent, and I applaud him for that. But I would suggest that it would be reasonable to charge landowners a higher rate of property tax if they're absentee landlords, not direct descendants of owners of that land. It doesn't have to be a huge amount, but it should be enough to compensate for them not being part of the community in the same way.
Well, but if the tenant pays the taxes, what good does that do?
Well,
It's penalizing the tenant.
Well, I always thought that the landlord paid the taxes. Either way,
that's not normal in any industry. That's where the problems come from when you make exceptions for some industry, and then you talk to the lenders. He looks at it, well, shit, what's wrong with you guys? Retail, commercial, office space, they all pay the taxes. Tenant pays. It's what, and so you make exceptions, and that's what causes red flags to go up with the lenders.
But with taxes, I don't know if I'm still on here.
Go ahead, you're on, Dallas.
Oh, sorry, Dan. You see, with taxes, though, I mean, if Billy Bob across the road is renting his land out for $70, and Robert, you're renting your land out for a grand total of $70, including the taxes. If the higher tax rate goes on there, you're going to get 55 and the other 15 will go to taxes. It's still only going to be $70 per acre spent.
Taxes according to the tax that comes in.
Yeah,
it's on top of the rent.
But they do their math, adding it up to what the area average
is. They
can
do the math how they want. Are they going to get the land?
Well, exactly. So I'd like to put that little bit of extra revenue back into our fire department, into training, into trucks. I mean, I was really fortunate that Firefighters Without Borders donated us a fire truck for our small little RM so our guys can look after it and run it. And we were honored to get a free fire truck. And I'm thinking, like, we need all the help we can get because we drop what we're doing.
Benefit is the average producer going to get from me doing all that work I do with the lenders and them understanding, and then instead of foreclosing, well, maybe like I understand the industry better and the better times coming, I'll give him an extension. How much is that worth?
I never seen
thousands of producers.
I never seen one lender out there with a shovel on the side of that hill the other day at that fire. All I seen with our local volunteers, not one bank manager was out there with a shovel and a flapper working to get his tail up.
But credit is everything for every industry.
I'm not talking about credit. I'm talking about our local volunteers and our local fire department and trying to do what's best for my little local community. I didn't see one bank manager out there. I pretty well know everybody out there by name.
I'm not going to see the bank manager. What I'm referring to, my work with the lenders benefits every producer in Canada because the lenders understand the industry better. They're liable, and agriculture right now is their preferred go-to area. because of the restrictions and the problems that they're having with other like commercial real estate, especially. And that's
Dallas,
what I'm
we're getting
referring
close to the end here. Do you have any other? I really appreciate you coming on and sharing this perspective, and I'm glad you guys are gentlemen to talk about it civilly. Maybe in the
Well,
old days it'd be on Zoom. We're pretty safe here, but what's your take on the conversation today overall, Dallas? I'm really interested in your perspective.
I was honored to be involved in this conversation to begin with, so I appreciate that. Overall take is I've always been afraid of investment ownership. My great grandfather come to Canada from 1904 from France because he wanted to get away from investment ownership. He wanted to get away from the doctors and the lawyers owning the land. And I'm really afraid for rural Saskatchewan that we are heading back to the doctors and lawyers owning all the land and the oligarchs having it and the farmers being the peasants. That's what I'm afraid of.
Interesting. Interesting perspective. Well, thanks for coming on, Dallas. I really
Well, how
appreciate
does
you.
that 2%, like if investors are 2% of the total market, how does that affect everybody? It doesn't make sense. 2% doesn't do anything, doesn't sway any market, it doesn't change any market.
Well,
What is the
I think
98% doing?
I don't think of it as a 2%. I think if I had 2% more firefighters, 2% better fire trucks, I still have a better firefighting background. You know, 2% on your scales is nothing, but on our little RM scale of only having, 200 people in this RM, 2% is one more person helping out. And that's what I think I'm afraid with the investment ownerships and absentee landlords that we're short that 1 or 2%, them extra guys, that extra manpower, the guys that are willing to drop what they're doing to come to the fire hall after the fire, make sure the trucks are maintained, full of fuel, full of water, fix what needs to be fixed, and ready to go to work. That's what I'm advocating the extra tax money towards is improving the stuff that the locals are using. Because not to be rude, you're not a local. You have the most land probably in this RM, but you are not in that fire hall greasing and maintaining
Yeah,
that
but
truck.
my tenants are. That's my point. Oh, my tenants live within a few miles away.
I know every one of your tenants, and they're all great guys. And some of your tenants hired men are on our fire department. I'm not disagreeing, but they can only get stretched so far too. And some of your tenants live 70, 80, 90 miles away. Some of them are locals. I mean, they're all good guys. I know every one of them by name.
Okay, I'd be careful with what I wish for. The whole industry and all the lenders and other families businesses are looking at what's happening. If you price yourself out, you just don't buy in that RM. You buy elsewhere.
There was a
Yes.
question here for you,
And
Dallas.
and
Steve.
capital won't flow in there. It doesn't matter if it's too different or you follow the socialist agenda.
The capital has flowed out of this RM.
Damn right.
Steve
If you
Andjelic is
make it
asking
very
Dallas.
different from other RMs.
Starbucks pays some of the highest commercial rents going. Would you consider them serfs to oligarchs?
There's not many Starbucks in this RM.
Oh, that sucks. That really sucks.
RM is so much different than rural. I mean, when you live out here, my nearest McDonald's is 2 hours away in another country, where I live. So I can't relate to how I think should be done in a rural municipality compared to how something should be done in the middle of Regina. It's apples to oranges. It's not even comparable. It's so much different. I'm more advocating for what's best for my local community. The dance club that's trying to raise money by selling cookie dough. The investment ownership doesn't buy those products, doesn't help raise money for the new daycare. I mean, that's where I see the locals are the ones that are buying cookie dough from mom's pantry and they're investing into the new daycare to keep our little community going, our locally owned store. That's what I'm more concerned with is looking after my own community, my own farm. And so that's why I think there should be a little higher tax rate. I'm not asking for the moon, but that's where I think, and maybe it would discourage so much investment ownership if the taxes were higher when you come in as an investor or an absentee landlord, because the taxes are going to be higher because you're not actively in the community, you're not actively doing your part.
Got to have more babies, I guess. Definitely,
I'm
there's
doing in
a
my
trend
mind,
line.
I'm doing my part. That's way above that because nobody else can do that part unless you had a career in commercial real estate and you had your neck in the chopping block of meeting mortgage payments, meeting payroll, meeting every other type of payment, and working
I,
with the cities and so on, and
and
working with
Robert,
the.
I know nothing about commercial real estate. That's
Well, you
not
don't have
my
to know about
forte.
commercial real estate. It just that's the language that the lenders talk, the bankers talk, and that's what they understand. And they don't understand. They try to fit agriculture into that same slot, trying to fit a square peg into a round hole, or vice versa, whichever way the saying goes.
Well, I think that's probably a really healthy debate for us to have, and I appreciate it because I think it's much better just than some of the back and forth that goes online without being a little bit more in face. And Dallas, are you satisfied that you got to make your point and
Oh,
had the opportunity to talk
very
about it?
much so. As I discussed with Kevin one time on the Bunny Hut Farmers podcast, I get my own shameless plug in there
Yes,
about
yes.
the investment there. It's just when you're looking after a small community like I did or do, it's tough to see the money leaving the community and getting almost nothing in return. So I'm very happy with being honored to be on here with you guys, and thank you guys very much.
Thanks, Dallas. Maybe you guys will have a chance to meet one day. Hey, Robert.
Oh,
The honor to be all mine.
which RM are you in?
44
That's south east someplace or
South Central.
south central. Yeah.
Well, you made
What's
a
it
new
called?
friend today, Robert. Dallas is a
I
great
know I
guy.
did.
Yeah, Dallas the same too. Good thing that you guys could talk. I'm gonna cut it off there. I cut it off. I don't want this sounds bad, but anyways, I do think, we've had some more comments, but hopefully you could read them. I do think I'm gonna end it there. It's gotten long. I knew I had a feeling coming in. So many panelists, so many topics, so many places we could take this. We are gonna do this again at the end of the month because Robert really wanted to get into the nuts and bolts of his thesis, and we already had this planned, so it kind of came on. But I like the way it flowed. Any last words from you, Kevin, on the show today?
No, I enjoyed it and hearing the perspectives. I think it's important that we have these sorts of discussions. Thanks you, Dan, for putting this together.
Thank you for coming on. And Robert, any final words?
Thank you, Danny boy.
Danny boy, I thought you were almost going to start singing there. Maybe. I don't know. You got a crooner's voice or no? I've never heard it.
Have a what?
Crooner's voice. Do
Oh
you croon?
yeah.
Have you crooned? Are you a big crooner?
You'd want to plug your ears though. That
Sounds like a
kind.
barnyard cat.
Yeah. Maybe worse. When you
Okay, we're
got
going to do it
hot
again
spots.
soon. Check it out, Growing the Future. I didn't mention all my wonderful sponsors, Hammond Realty, grip.ag, Crappy Nutrition, we appreciate you. Bonetrail.ca, making beautiful gifts. Soon to come on, too, MNP. We're having lots of fun. So, anyways, thanks, everybody. Thanks, Kevin. Thanks, Robert. Thanks, Tim. Thanks, John. And thanks, Dallas. And thanks to the live studio audience. We really appreciate you. We'll see you next week. We got lots of great stuff coming up. So good luck finishing seeding, Kevin. How much do you got left?
Just a couple of 100 acres of green feed barley for some cattle farming neighbors we cooperate with.
Fair.
So getting down to the final strokes. Send rain now in the
Did you
southwest.
get some rain?
We've had some good rains, but boy, these dry, hot days and the wind blowing,
Oh
it
yeah.
doesn't take long in the southwest where you wish you had another rain coming, and maybe
The Cambry
that would be
area, you
great.
said?
I'm near Cambry, northwest of Swift Current.
Oh yeah, I know exactly where it's at. Yeah. Yeah, that's in that Palliser Triangle. Part of. Yeah. Yeah, but when we're switching now into the Gleisberg cycle into a wetter year, so you guys should do well once we're fully into it. But it's a 90-year cycle, so half time is about 45 years. So now we're just flipping into it. But
Sign up
Fundraise.
for the Great Canadian
Yeah,
Bull
you
at
guys
the
were
end of the
doing
month. We're going to cover that in the Great Canadian Bull at the end of the month, Robert. We're going to really give you the platform. I know today was all over the place, but thank you so much. Appreciate you guys. Have a great day and take care. Stay safe out there.
Okay, have a